Good evening. It is time for today's Tax Talk. I'm your host. I'm attorney Stephen Leahy. It is Monday, November 28th, the year of our Lord 2022. IRS came out with a warning. You won't want to miss it. When the IRS warns you about something, you better pay attention. That's what we're going to talk about today. Won't you join us? So, the IRS came out with a warning about 1099-Ks. And you might ask me, Attorney Leahy, what's that all about? And haven't you been talking about that? The answer is yes. I've been talking about it since not last March, but the March before that, 2021, when they passed the law. And actually, it really didn't become common knowledge until after they passed the American Rescue Plan. And they included in that this Cash App provision where they changed the rules on who had to report for these information returns. Now, IRS information returns are really the focus of what the IRS is doing going forward. And I don't think many people recognize that about what's going on. Remember last year they tried to push the bank records that everybody had to report how much money went through their bank. Well, that's really the ideal. They really want that. When I say they, I mean those that want to collect more money, and that's most politicians, most of the government. They want that. I think it's a violation of our rights. My own opinion, and I've put some good arguments about that and what the laws now say, and how I think it's prohibited by the Constitution. But many don't agree with me. Certainly, the Biden administration doesn't agree with me. They want to have everybody's income revealed, to the IRS every year, every bank account, and that's really where we're going with this information returns, the 1099-Cs. You may have also not even the 1099-Cs and the 1099-Ks, the 1099-Cs, the 1099-Bs, the 1099-Ks. Remember, it wasn't too long ago when really the only 1099 was a 1099 miscellaneous. But now they are very specialized and they're gathering very specific information. And more and more, not because the type of form tells them how they can tax it. And they don't have to have someone look at it. It all goes through automatically. And so and it depends what numbers, which box, how it gets taxed. And that's very important. And so this is the future. It's coming to us in the 1099-Ks. Attorney Leahy, didn't they pass that last year? Yes, but we won't see it until February of 2023. And that's when it's really going to become obvious to people about what's going on here and the trouble that it's going to cause. So I'm going to read a couple stories, and you'll see why, and I'll comment as we go. But to me, it's staring us right in the face. And so let's look at some of these stories that are out there. First, I want to read the IRS story, right? That they put this in the news November 22nd. Get ready now to file your 2022 federal income tax returns. A lot of this I'm not going to get into, but the Internal Revenue Service today encouraged taxpayers to take simple steps before the end of the year to make filing their 2022 federal tax returns easier. With a little advanced preparation, a preview of tax changes, and convenient online tools, taxpayers can approach the upcoming tax season with confidence. Filers can visit Get Ready webpage to find guidance on what's new and what to consider when filing a 2022 tax return. They can also find helpful information on organizing tax records and a list of online tools and resources. Now, Get Ready by Gathering, yes, you need your tax records. But then people say, well, what does that mean? And this is where it's going to change. What are the tax records that you need going forward? When filers have all their tax documentation gathered and organized, that's in the best. Okay, so what get ready for what's new. This is what I really want to talk about. With the end of the year approaching, time is running out to take advantage of tax withholding estimator. This online tool is designed to help taxpayers determine the right amount of tax to get withheld from their paycheck. Some people have life changes like getting married or divorced, welcoming a child, or taking on a second job. All of this is important because what happens many times, people take on a second job and they keep their withholding the same. But yet their income goes up, and so their withholding should also go up from both jobs, because one job might not know what the other, that you have two jobs, and then that pushes you up into a higher tax bracket, and then it turns out that you didn't save enough. You have enough taken out, I should say. Is it a savings plan? Kinda. It's kind of a savings plan, but the IRS will say we're a pay-as-you-go outfit. But I get that. Okay, so let's go back to the story. As taxpayers gather records, they should remember most income is taxable. Remember the 16th Amendment. From whatever source derived. This includes unemployment income, refund interest, and income from the gig economy and digital assets. Here it comes. Taxpayers should report income they earned, including from part-time work, side jobs, or the sale of goods. The American Rescue Plan Act of 2021 lowered the reporting threshold for third-party networks that process payments for those doing business. Prior to 2022, Form 10, this is important now, this is the change. And you'll see the drastic change of why it's going to impact so many people this next year. Form 1099-K was issued for third-party payment network transactions only if the total number of transactions exceeded 200 for the year, and the aggregate amount of these transactions exceeded $20,000. Now, a single transaction exceeding $600 can trigger a 1099-K. That's true, but it doesn't have to be a single, right? It could be multiple that adds up to more than $600, right? So I only do $100 at a time. So they'll no. If they add up to more than $600, you'll get a 1099-K. The lower information reporting threshold and the summary of income on Form 1099-K enables taxpayers to more easily track the amounts received. It's for the taxpayers, you see. That's why they're doing it. It's for you to track. Remember, money received through third-party payment applications from friends. This is my favorite part of this. Remember, money received through third-party payment applications from friends and relatives as personal gifts or reimbursements for personal expenses is not taxable. Those who receive this is the good part. Those who receive 1099-K reflecting income that they didn't earn should call the issuer. The IRS cannot correct it. So, if you're a third-party transaction, and like Venmo or PayPal, and you have someone that had more than $600 go through their account, and that sounds like you're required to give them a 1099-K. Are you going to guess to say, well, let me look at the transaction. Oh, this might be for dinners or something, or reimbursements? No, they don't know what it's for. They're just going to report it on a 1099-K. And now the onus is going to be on you to tell the IRS why it isn't taxable. You could fight with these organizations to change the 1099-K. That's an uphill battle, right? And you'll never get it done in time to include it on your tax return, right? Because you're going to get these in February, end of January, February of the year, and then you're supposed to, if you're going to go back and forth with them about correcting it, because it's not easy to get these organizations to correct it. Even if they do, but by having it done by April 15th is going to be a task. Okay, so you're going to wind up including the 1099-K income, and then showing the IRS why it should not be taxable. And the onus is going to be on you to do so. Well, Attorney Leahy, I'm not going to do it then. Well, then you'll pay tax on it, right? Then it's going to be income. They're going to change your tax return. You're going to get audited, And that's what's going to happen. And it's really going to be a hassle. Credit amounts, let's go back to the story. Okay, let's go back to the story. Credit amounts also change. Oh, okay, now they're going to talk about tax credits and everything changes. That's true. The IRS cautions taxpayers not to rely on. Okay, so here's the story. IRS warns Americans over $600 threshold to report Venmo, PayPal payments. The IRS is interested in transactions involving part-time work, side gigs, and selling goods. The Internal Revenue Service is reminding tax filers to prepare to report transactions of at least $600 that are made through so-called third-party facilitators such as Venmo and PayPal. The agency on Tuesday posted an explainer, that what I was just talking about, warning American business owners earning $600 more per year on payments that are received through apps such as Zelle. Now, I've done a story about this Zelle. This is mistaken. Zelle is not a third-party authorization company, transaction company. So that Zelle app is not, you're not going to get a 1099-K from Zelle. That's my understanding. That's, and I've reported on that in this space. Cash App, Venmo, PayPal, to file a tax form known as 1099-K. The IRS is interested in transactions involving part-time work, side gigs, and selling goods, according to the agency. The rule does not apply to non-commercial payments like reimbursing someone for food or rent or other one-off transactions such as selling an old piece of furniture, according to accountants. Yes, those aren't taxable, but you're still going to get a 1099-K. Before this year, the threshold for filing a 1099-K was at least 200 transactions totaling an aggregate of more than $20,000. Again, with those parameters, you're probably getting people who that's their business, and that makes sense. But when Congress passed the American Rescue Plan, it included a provision that reduced the reporting threshold to a single transaction over 600 or multiple transactions over 600. The Biden administration hopes that by reducing the threshold, now this is where it becomes very telling about what this is. The Biden administration hopes that by reducing the threshold, the measure will crack down on Americans evading taxes by not reporting the full extent of their gross income. The proposal was offered as a way to help pay for the $3.5 trillion social spending bill that would invest in climate programs, child care, and education. Remember, President Biden told us this won't cost anything. Well, why won't it cost anything? Because we're going to get it from this bill. Tom, and then there was more. There was more in the Build Back Better plan, the 87,000 new employees for the IRS. That's another way they're going to get it. A financial planner told CNBC that filers must include any sum that is reported on Form 1099-K as part of their business income. Actually, again, if it's business income, you have to report it whether it's on a 1099-K or not. Failure to do so trigger an audit, since the IRS obtains a copy of the Form 1099-K directly from a third-party payment facilitator. But the provision has been met with pushback from sites like Etsy and eBay, who joined with similar retailers to create a coalition of 1099-K fairness. And I agree, it doesn't seem fair because it's going to cost them business. It included the Biden administration hopes that reducing the threshold. The proposal was offered as a way to pay that $63,000. Failure to do so could trigger an audit. IRS obtains a copy of the form. But earlier this year, President Joe Biden signed into law the Inflation Reduction Act, which included a provision that will lead to hiring 87,000 additional IRS agents. The nonpartisan watchdog Joint Committee on Taxation said it anticipates that between 78% and 90% of the estimated $200 billion the IRS will collect as a result of the bolstered workforce will come from small businesses. Actually, the number is much higher than $200 billion. At least that's what they say. President Biden and the Democratic Party have insisted that Americans earning less than $400,000 annually would not have to pay a cent more in taxes. But then they say, well, that means on taxes, but this is they have to pay tax on this. There's cheating on this, so this doesn't count. But the Joint Committee on Taxation disputes this, saying that between 4% and 9% of the money collected will come from businesses that earn above $500,000 a year. So did you see that? 4% to 9% of the money. Well, that means 96% or 91% are going to come from people who make less than that. Isn't that what that means? So how is that the same? So here's another story, very similar. Side hustlers who get paid via Cash App and Venmo risk being audited if they don't report their earnings, IRS warns. The IRS warned people who make over $600 from side hustles should declare earnings to avoid audits. Workers who get paid via apps, including Venmo, PayPal, and Cash App, should file the tax form 1099-K. Actually, they get a 1099-K, right? They don't file it, although you should file it with your tax returns. Tax experts told Insider that the worst case would be penalties for insufficient filings. This is exactly correct. People who earn money through side hustles could be at risk of a tax audit if they don't report earnings over $600. The Internal Revenue Service warned this week that side hustlers and part-time workers should declare payment they receive from apps including Venmo, PayPal, and Cash App over $600 threshold. Actually, they say you got to report all of it anyway. People who are earning income in addition to their full-time job, as well as gig workers, should file the tax form 1099-K to declare earnings, the IRS said. You get a 1099-K from the third-party transaction. You don't have to file. You don't produce that document. Failure to do so could trigger an audit from the tax collection agency. The threshold of how much workers earn before they need to make a tax filing has dropped significantly since last year. It used to be for earnings over $20,000. Again, this is wrong because, right, you always had to report all of the income that you got. The difference now is that you're going to get a 1099 from these third parties who you get money from. So you don't produce 1099 forms. These third parties do it, and they send it to the IRS. And they're going to be in error. Many of them are going to be in error, but you're still going to have to explain it or pay the tax. That's where I have a problem with it. She said the worst case for people who don't declare earnings to the IRS is that they are audited and could be subject to penalties and accrue interest. She advised people running side hustles to take a course on taxes or hire an accountant. I personally believe an accountant is a great investment for everyone, as a good one will provide more than tax return. She said the knowledge and access to information can be invaluable. The change of when workers need to declare earnings came into effect last year when this COVID-19 stimulus package known as the American Rescue Plan of 2021 was passed by Congress. Again, this is wrong because you don't produce a 1099-K. It is important that your business books and records reflect your business income, including any amounts that may be reported on a Form 4 1099-K, the IRS said on its website. It added, you must report on your income tax return all income you receive. In most cases, your business income will be in the form of cash, checks, or debit credit card payments. Well, that's true. But again, this was a little bit misleading because they're insinuating that somehow you, as the taxpayer, have to produce this 1099-K. And again, if you make money and you don't get a 1099-K, you still have to report it. It's still income. And if you don't report it, that's evasion. That's just the way the rules work. Now all they're doing is having these third parties track it for them. And they're requiring, they're giving more scrutiny to people who get money this way. But again, many people who get money that way aren't in business. And some of that money's not going to be for business. But you're still going to get a 1099-K, and you're still going to have to explain it. That's where the problem comes in, right? They're putting on. We're trying to make our tax returns easier, and yet the IRS is making. It's not the IRS so much as Congress is making it more difficult. Not easier. This will really cause trouble. And this is just the first step. Again, we've already talked about the 1099 NEC and the 1099C and the 1099B and all of these other 1099s, and they're an effort to track your income. But if they're erroneous, that really causes trouble to you, because now you, as the taxpayer, have to explain it. And this is where it comes in. If you've ever tried to explain something to the IRS, you know how difficult that can be. I see it all the time that people start, it's an obvious error. Well, try to tell that to the IRS. It's obvious error. Try to get it fixed. It's not something you just call and say, oh, listen, look, this is an obvious error. Let's get it. Let's fix it right now. Usually doesn't happen that way. Almost never does it happen that way. Right? You have to engage with the IRS and go back and forth with the IRS and put things in writing to the IRS and then appeal to the IRS when they make the decision that's wrong. And it gets very frustrating. And I've had people get very frustrated over a very little bit amount of money, actually. And sometimes and this is what the IRS wants, right? They want you to just throw up your hands and just let them, just pay it. Okay, it's only an extra $1,200 that I'm going to get taxed. I'll pay 20% of that and whatever. I'll just pay it. And that's going to happen a lot. And a lot of people are going to pay more taxes than they have to. Americans, any American, should not have to pay more tax than are legally obligated to do so. Right? We really want to help people get their tax burden down. Right? Fix the IRS problems you have and avoid incurring too many taxes. That just makes sense to me. So anyway, thanks so much for joining us. I can rant about this stuff forever. I've been talking about these cash apps for a long time now, and I've been on radios and I've been on television shows, and I've talked about this, and now it's coming to fruition, and people are going to see it, and it's going to really be it's really going to come around. So I'm going to ask you to like and subscribe. Who else talks about tax issues like I do? I don't think anybody else does. And also, remember, if you have an IRS problem, if you owe the IRS money, if you have unfiled tax returns, you should give us a call, 312-664-6649, or better yet, go to my website, freeirsbook.com, freeirsbook.com. Get your free copy of my book, Deal with Your IRS Problem Today. I will pay for the printing. I will ask you to pay for the shipping and handling, a small shipping and handling fee. So go to freeirsbook.com for your free copy of Deal with Your IRS Problem Today. So thanks so much for joining us here today. I appreciate it. We'll be back tomorrow with Crypto Tuesday. Crypto Tuesday is always a fun time here, so you won't want to miss it. So thanks again for joining us. God bless you. Out.